The fastest way to buy Bitcoin in Australia from an exchange you can trust. Bitcoin.com.au.
Blockchain technology, it's clear we are seeing something quite revolutionary that's going to change the world.
I don't need recognition. I'm on a mission. I'm paying dues. I'm in position. I'm staying up. It's getting late. You're doing good. I'm doing great.
It's a huge push into connecting the physical world with the blockchain.
It's always a good idea for investors to make the trend the trend.
You're doing good. I'm doing great.
Hello and welcome to Coincast TV. I'm Tessa Dempster. On tonight's show, the old school investor who wants you to know about crypto. Blockchain job boom, the roles recruiters are struggling to fill. Have you got the skills to pay the bills? And striking it rich, could crypto be the next gold rush? But first, the week ahead with Katie McDonald.
While ICOs have been slowing down, this hasn't stopped venture capitalists from entering the space, with traditional investment on the rise for 2018. Ripple is continuing to make waves this week, this time for its cross-border payment technology. The company's X-Rapid platform allows international money transfers to happen within minutes at a much lower cost, putting an end to days-long clearance times and high foreign exchange fees. It's now being rolled out to 3 international payment providers. And here's an unusual one for you. Ethereum co-founder Joe Lubin has reportedly invested $6.5 million in startup DrumG. It's unusual because DrumG was founded by several executives of R3, one of the Ethereum blockchain's most heavily funded competitors. Meanwhile, South Korea has been busy in the blockchain space. The nation's largest venture firm is backing its first blockchain startup. And the chairman of Korea's National Policy Committee is calling for ICOs to be legalized along with a regulatory framework. Tessa.
In a market that's heavily influenced by sentiment, you might need a crystal ball to see into the future. But before you go in search of a fortune teller, the answer might be in the charts.
After 400 yards, turn left.
To get around town, you need a GPS. And for traders trying to navigate the crypto market, they have tools to map their journey.
Turn left.
The two most talked about are fundamental analysis versus technical analysis, or charting.
What charting aims to do is capture all those price movements, which is a visual representation of all available information and human emotion.
Alex Saunders of nuggetsnews.com.au says traders find technical analysis of cryptocurrencies a more reliable navigation tool.
Traders argue that technical analysis is a better indicator than fundamental analysis of a coin because price doesn't lie.
Take the second exit.
In the same way a GPS might not recognise a new suburb, critics of fundamental analysis say the crypto market is still too new to accurately evaluate a crypto asset. Whereas technical analysis can help traders light the way with what's known as candles.
On a daily candle, we're looking at where the price opened and closed, and if it closes higher than when it opens, that candle is green.
Red if it closes lower, and like a real candle, these ones come with a wick.
Those wicks we see at the top and bottom are if the price traded outside the range of where it opened and closed, and that's how a candle's formed.
Take the fourth exit.
There's also a navigation tool for traders who want to get there fast: volatility trading.
Volatility trading can be beneficial for investors because we see big movements in price that we don't see in traditional markets.
It can be a fast way to make money.
So if you can use those moves to your advantage, you can get those years worth of gains in just minutes if you're on the right side of those trades.
But like all good drivers, Alex says anyone entering the crypto highway should take their time.
You've got to be patient and be realistic with your time frame, but yes, I certainly think that the low base that we're at now, there's definitely room to the upside in a number of good quality projects.
Find your way to those and
You have reached your destination.
He's the straight-laced traditional UK investor that's on a mission to obliterate financial illiteracy. But Graham Rowan isn't all tea and scones when it comes to his investment portfolio. And he's not immune to a little bit of FOMO.
The crypto market has London calling.
For me, investing is all about creating long-term sustainable wealth.
Graham Rowan, chairman of the Elite Investor Club, is the latest in a growing list of UK investors to explore the crypto market in Asia and the Pacific.
People who've obviously been around the block a few times, they know about traditional markets, and now I think they're genuinely keen to learn about crypto, blockchain, where's it all going, and how can I be a part of that journey?
Even though he's been a more traditional investor, he sees opportunities in the crypto market.
As a human investor, I can't separate my emotions completely. I think one of the biggest emotions around cryptos is FOMO, the fear of missing out.
The self-described renegade investor believes those opportunities will arise over the coming years by a mix of traditional markets and blockchain technology.
It'll be a bit like what's happening in the automotive world. There'll be hybrids that develop, which are a mix of the two, which will actually potentially give investors the best of both worlds.
But he cautions against investors putting all their eggs in the crypto basket.
I'm almost having to say, look, you know, there are other assets out there. You don't just have to focus on cryptos.
And his advice for anyone considering investing in crypto technology?
I think one of the things that I definitely would agree with Warren Buffett on is don't invest in something you don't understand.
In other words,
I think if you're new to the whole world of crypto technology, you've got to start by getting yourself educated.
So now might be the time to hit the books, or smart device, for that smart advice.
Now let's take a look at the top cryptocurrencies of the week, brought to you by Caleb and Brown.
It's been another stable week for Bitcoin, with the price hovering around the $6,500 mark going into the fourth quarter. Traders are waiting patiently to see which way the trend will break out. With only a 10% difference, the volume of long and short traders are relatively close to parity. We anticipate far less price volatility for at least the next month. On our spotlight is Ethereum this week. BitMEX Research has a study that shows ICOs no longer hold a significant amount of Ether. Just $830 million worth of Ethereum is held in ICO treasury accounts compared to the $5.4 billion that were raised. Going forward, Ethereum's price may see less selling pressure from the industry's burn rate. And that's it for Caleb and Brown's top cryptocurrencies of the week. Back to you, Tessa.
Coming up, gold fever, why crypto and the world's oldest precious metal have a bright future together. And it's time to sharpen up those skills, the blockchain jobs recruiters are desperate to fill.
You're doing good, I'm doing great.
Welcome back. Just weeks after two massive gold-encrusted rocks were found in the West Australian goldfields, another rush of gold fever started in the Aussie state this week. This time they were fossicking for a different sort of gold, digital gold.
Diamonds are forever, but another precious metal is becoming crypto's best friend. When it comes to traditional investments, gold wins first place every time. And now this yellow rock is a shining prospect for digital assets.
Digital assets, particularly cryptocurrencies and asset-backed tokens, I think are really going to transform the gold trading and marketing ecosystem, because it will allow a digital replication of physical assets.
Gold's market value is estimated to be more than $7 trillion. But unlike Bitcoin, we've been mining this coin since the 8th century.
Cryptocurrencies are so volatile. Gold is not as volatile. It's an asset with a long history. It's very stable. The role digital assets and cryptocurrencies can play is actually making the process of settlement faster and more efficient and save costs.
Many industries have already started to explore token sales as a way of crowdfunding projects, and the gold industry is no exception.
There's no reason why crowdfunding and ICO couldn't work for the mining and the gold industry. We've been helping our clients, for example, liquidate and move from precious metals to cryptocurrencies, and it's much faster and cheaper than working through traditional banks and wires and so on.
For those sitting on gold mines, crypto could be the ultimate pickaxe. As an alternative funding option for miners, digital assets could help get exploration projects up and running faster.
So they'll be able to pre-sell some of their production in order to fund going into production. They'll be able to write all kinds of derivatives contracts against their metals in order to secure funding very cost effectively and on a global 24/7, very transparent and, as I said, low-cost marketplace.
Traceability, documentation, and supply chain efficiency, as well as faster trading and quick payment settlements, are just some of the additional advantages crypto could bring to the bullion market.
The upshot from our point of view will be a lot more volume, a lot more liquidity in the markets, and really bringing gold and precious metals back to its status as real and transactable money globally. The great thing is that they'll be able to combine the store of value of a precious metal with the flexibility and power of smart contracts and trustless peer-to-peer transactions. So we're going to see all kinds of amazing innovations over the next few years in this space.
The gold rush for crypto adoption may not be happening just yet, but people are starting to take a shine to digital gold.
Don't be afraid of the technology. Don't be afraid of cryptocurrency. It's here to stay. It's not going anywhere. Let's adopt the technology as far as we need to make our industry better.
Now to the charts with our data guy, Data Dan.
Is there a relationship between gold and Bitcoin? The Royal Bank of Canada seems to think there is, and if anything in the last year, that view has somewhat been justified. But it's important to understand how gold has been tracking against Bitcoin and, more importantly, the relationship that exists between the two now. If we look at gold, for example, over the last 3 years, if anything, it's traded in a much wider range. The prophets of doom regarding financial markets have not materialised, and as a result, gold has really delivered zero, if you'd like. It's traded between $1,200 to $1,300 and effectively has not moved much. If we look at Bitcoin, for example, that ride has been somewhat more volatile and indeed somewhat more interesting. We saw a price for Bitcoin of almost $20,000 in 2017. However, the 2018 version of Bitcoin has become somewhat more boring as it settles in between a range between $6,500 and $7,000. It does make for interesting reading. But if we look at the two side by side, this is where we get the thematic which we're after, convergence. Effectively, the two have price moves that work in lockstep with each other. As Bitcoin matures, it starts to attract some serious institutional cash. And if anything, is now starting to mirror somewhat of a digital reserve currency. Sounds strange, doesn't it, from 2017? But if you look at the Bitcoin price performance and indeed compare it next to gold, it doesn't seem out of the question. Hindsight is indeed a wonderful thing to view with 20/20 vision. But I'm not sure even the good folk at Royal Bank of Canada knew what they were necessarily theorising in terms of a relationship between Bitcoin and gold.
Move over mining, there's a new skill shortage in town. Demand for blockchain experts has skyrocketed, and recruiters say finding the right people for the job is like looking for a needle in a haystack.
Attention all
developers, programmers and coders.
If this sounds like you, then blockchain technology wants you to join the front line in the crypto revolution.
Are these skills hard to come by? Absolutely.
But in all seriousness, the blockchain technology is moving so fast it has led to a shortage of recruits, causing a skills shortage.
So absolutely, it's going to be probably the biggest challenge at this stage in identifying these skill sets.
Bez Tavasoli from recruitment agency Michael Page is trawling for candidates who are skilled in blockchain technology. And finding the right workers is, well, hard work.
A simple job posting on a job board isn't going to be able to attract the right talent pool.
So where do you find the right talent pool?
Jumping onto communities, on websites, onto coin offerings, and getting involved in those communities and social media platforms, including the likes of Facebook and Reddit, are really popular.
Bez also says companies are training in-house because they can't find candidates outside. But when one of his clients did go looking,
what they identified were a lot of the people who had these skills were self-taught and self-educated, and they could just be teenagers in their bedroom playing around the computer.
Working for a living without living at all.
According to TechCrunch.com, demand for blockchain engineers has skyrocketed by 700% since January last year. And for every blockchain developer who's employed in the market right now, there are 14 other job opportunities on offer. Bez believes eventually, though, the shortage won't last.
Over the medium to long term, though, it won't be an issue. In the short term, it just may be a challenge in identifying where these skills are going to come by.
The answer could lie in our education system.
I believe New York University actually have recently introduced a Masters for blockchain, so obviously they're trying to be able to meet real-world demands, which is great, and I believe this will be ongoing, and other education providers will certainly need to follow.
To create an assembly line of blockchain specialists because, after all,
they're certainly not growing on trees at the moment.
Let's take a look at the projects to watch, brought to you by CTIA.
iCash is set to launch an insurance protocol solution that validates blockchain transactions and smart contracts. The team has an impressive resume, having held top positions at corporations including Goldman Sachs and Credit Suisse. Cloud computing marketplace Perlin is harnessing the power of your smart devices while they're idle. The project aims to use unused energy to fuel supercomputing operations. Taking a look now at dApps, Multivac has made things a little more flexible by using a technology called sharding. Sharding works by separating super large databases into smaller, faster parts called data shards. And those are the projects to watch this week. Back to you, Tessa.
Coming up, why a Japanese business is paying its workers in crypto.
You're doing good, I'm doing great.
Token sales have been a popular mechanism for blockchain companies to raise capital. But as the market matures, this leading blockchain advisory firm says the industry will need to mature with it.
I'm joined now by the CEO of DigitalX, Lee Travis. Now, Lee, DigitalX played a pioneering role in the growth in the market for crypto assets, but it's been a very volatile 12 months. Can you start by explaining to us the reasons behind some of that volatility?
Yeah, certainly volatile is a great word for it. You know, we've seen months in crypto where the market's moved over 80% in aggregate, which just tells you that you know, the market can get far ahead of where the technology is. We've seen speculators pile into the market from all areas of the globe, which has been exciting because it's allowed individuals to participate in a market that previously was only open to billionaires as well as venture capitalists. You know, with regards to ICOs, I think they've been a fantastic development. For the first time in history, we've seen entrepreneurs have the market fund their ideas, as well as the market put a price on, you know, what an idea is worth. At DigitalX, you know, we're extremely proud to have been pioneers in this marketplace and help bring projects to market faster than what they ever would before.
Can you tell me a little bit more about initial coin offerings? Does it now look like that funding mechanism failed?
Well, I think hindsight's a wonderful thing. You know, clearly, there was a lot of euphoria in the marketplace, and speculators really priced the market ahead of where the technology is. I think ICOs, in the way they've been able to put a price on entrepreneurs' ideas, have been an exceptional development. And I do think that the market now is moving towards more regulated offerings, so security token offerings, where rather than getting first access to a product, you're going to get access to voting rights, equity and revenue share of companies, and that's really going to drive the market further.
So the crypto crash is now worse than the dot-com crash back in the 90s. What have we learnt from this?
You're right. You know, a lot of people did lose a lot of money during the dot-com crash of the 90s as well, but out of that crash emerged some of the most exciting and powerful tech companies that we know today. The Apples and the Googles of the world, they came through that. You know, markets go up and markets go down, and that's what's happened in the crypto market too. But what's been developed over the last couple of years is some really powerful open source technology that will support the market going forward into the future. And I'm fully confident that some of the most exciting companies of the future have been developed and will be developed through this. DigitalX is at the forefront of new technology and will continue to pioneer that as the market progresses.
So where does DigitalX see itself over the next 12 months?
I think the next 12 months will be very exciting for DigitalX. We've got an exciting team that's been involved in the blockchain ecosystem, from mining, trading, development, ICO advisory, and soon to be security token offering advisory. So I think that the market's going to evolve and we'll be ready to move forward with it. I'm involved heavily with Australia's industry body, the Australian Digital Commerce Association, and some exciting developments happening on that front. And I think after this market cooling off period, and the launch of new security tokens early next year, we're going to see another growth leg in this marketplace that'll be much larger than we saw before.
Thank you very much, Lee. That was Lee Travis, the CEO of DigitalX. Back to you.
Now to the week ahead with Katie McDonald.
The world's two largest enterprise blockchain groups say they're teaming up to promote blockchain technology to companies. Hyperledger and the Enterprise Ethereum Alliance are already quietly working together to adopt aspects of each other's platforms. They say the partnership will accelerate the adoption of distributed ledger technology for business. A Japanese business could soon start paying its workers in crypto. Tech firm GMO Internet says its 4,000-strong staff could soon choose to receive part of their salary in digital currencies, starting from next February. And now to the global market. The Venezuelan Petro has officially launched with its wallet now available on Google Play. The results of its public listing will be released early next month. In conferences, the San Francisco Blockchain Week kicks off in the US, and don't forget to pack your bathing suit for the Pundiek Summit in Bali next week. Tessa.
We've had government leaders and Wall Street heavy hitters publicly backing the technology. But are we nearing a time where blockchain technology is as commonplace as the internet?
My view of representative democracy is, at the moment, we vote for somebody every 4 years, and then we trust those people to look after our interests for 4 years. With technology and a mobile phone in every person within our population's pocket, we could literally be involved in every decision. And then the role of government doesn't become making decisions for us, but the role of government becomes educating a populace and sharing context with human beings. Rather than taking away our power, governments would be empowering us to know what is going on. They'll just be human beings making decisions that change our lives. My view is that in 5 years' time, we won't be talking about blockchain. It will be similar to the underlying architecture of the internet. We will just be seamlessly interacting, and we won't be even mentioning blockchain, but all of the underlying architecture will be utilizing blockchain, and the human beings using it will benefit from the reduced cost base.
Thanks for joining us tonight. For more on the stories you've just seen, go to coincasttv.com. You can also find us on Apple TV or watch some of our stories on the Wall Street Journal online. Coincast TV is on Sky News Extra every Friday at 7:30 p.m. Until next week, keep hodling.